Okay, just give me a sec. I'm trying to make sure everything is working fine. If you guys can hear me, can you just say hi in the chat box so that I know I'm not talking to myself? I'm hoping everyone can see my screen fine. Okay, I'm just waiting for more of you to sign on and I'll start the webinar. Okay, hi. We're streaming this on different platforms, by the way. So if you guys have anything to say or any questions you want to ask, do feel free to type it in the chat box on whichever platform you are on, whether you're on Facebook, YouTube, or wherever it is you're watching this from. You can just type it into your chat box and I will be able to see your message from my side. I'll be able to receive your message. Okay? Hi, welcome. Okay, if at any time something's not working, hey Martha, at any time something's not working, like my screen's gone black or like the slides are jammed or whatever, do let me know. Please let me know so that I don't continue with the webinars with you guys just staring with this at the same slides or something. Okay, I am going to start. I do see more and more people joining. Again, just a reminder for those who just joined, we are streaming on different platforms. So if you have any questions or anything you wanna um, highlight or update, just type it in the chat box on whatever platform you are on, and I will be able to see it from my side. So whether you are on Facebook or Vantage website, on Telegram, on YouTube, I will be able to see it. Hey, Raphael. Okay, let's start because today we're gonna do a bit of breaking news, and then if we have enough time, we usually do have enough time anyways, we can move on straight to looking for setup. So that'll be technical analysis. Okay, so hi everyone, welcome to our Monday weekly forecast as we talk about key fundamental news events to expect for the week ahead along with their technical setups. Okay, so we'll be highlighting key news events, central bank notes, and key support and resistance levels to watch out for. This webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We're an award-winning research firm and finalists for 2019, 2020, and 2021 for best Forex and equity research. Okay, so if you guys have any questions, anything at all regarding trading, Forex, cryptocurrency, whatever it is, feel free to ask and I'll try my best to answer you guys. Okay, so what we do here at Everest, we work with a lot of major financial institutions to help them forecast where the markets are heading. And now we have a special partnership again with Vantage Markets where we're bringing you guys the good stuff every day. Okay, so whatever we are bring you guys, please know that we spend a lot of time back testing and putting a lot of research time on research to get you guys the like as accurate as possible information. Okay, anyway guys, you know how this works. Disclaimer. This webinar is purely for educational and nothing in this webinar should be construed as investment or trading advice. Okay, so please do your own due diligence before trading. All right, trading, Forex, and CFDs carries significant risk and is not suitable for all investors. Okay, so especially if you are trading on margin, the risk just multiplies by how much margin you are using. So please do not put your life savings into this. Please diversify. Don't sell your house. Don't sell kids. Don't sell anyone to Don't sell your organs to go all in trading. Okay, please diversify. It is risky business. That being said, it is also very lucrative, and it brings a lot of profit if you know what you're doing. So my advice is to please put in the time and effort to learn the skills before you actually jump into trading. Okay, so again, Everest Fortune Group, you guys already know us. Let's meet the team. So we've got Desmond Leong, our CEO and chief strategist here at Everest Fortune Group. Okay, you've got me, Cass, for those who don't already know me, because usually it's the regulars who join our webinars. Okay, so you guys, some of you might already know who I am, but for those who don't know who I am, my name is Cass. I am an investment analyst and prop trader here at Everest Fortune Group. I'm a profitable trader managing more than 300,000. Actually, it's way more than 300,000. Okay, while passing the strict FTMO test twice. So for those who don't know what this is, the prop trading test that requires you to be 10% in profit. So I've actually passed this 4 times, right? So my specialty is in identifying key levels of reversal through confluences, Fibonacci confluences, supply, demand, and basically keeping overall trend of the market. Okay, so let's move on straight to the news update, and then we can jump into the live charts to hopefully find some winning trades for today. Okay, so let's start with a bit of fundamentals, a bit of news. So what do we have today? So what happened across the Asia session? I'm going to start with the Asia session. So the lack of data and news flow saw tepid trading amongst Asian session heavyweights. What does this mean for the Europe and US session? Okay. By the way, today's a public holiday in the US, so certain stocks or whatnot may not be moving today. Okay, so do keep a note on that. So what does this mean for Europe and the US session? Thinner than usual trading can be expected amid the month and book closure and Memorial Day holiday in the US. So, dollar index update. What can we expect today? It's a bank holiday today. Okay, so no major news events because it is a bank holiday. What can we expect from the greenback? The greenback is likely to experience thinner trading amid the Memorial Day holiday in the country today. Okay, so central bank notes that confirmed that the community expects further 50 BPS hikes to be appropriate. 75 BPS hikes off the table. The balance sheet reduction pushed up to 60 billion in treasuries and 35 billion MBS over the 3-month time frame. So the next meeting you guys want to take note of is the 15th of June. Okay, 15th of June, which is in 2 weeks. Our business for the DXY at this current point of time is actually mixed. Okay, it's mixed. Okay, let's move on to gold. So what do we have with gold today in terms of news events? No major news events. What can we expect though, however, is that rising inflation expectations and less than aggressive central bank rate hike path would continue to underpin the bulls in the precious metal. Our business for the next 24 hours will be weak bullish. Okay, weak bullish for gold. Japanese yen. I'm just gonna quickly go through the news, okay, so that we can spend a little bit more time on the charts today. I want to focus a bit more on technical analysis today because I do find that we don't really have a lot of time on that usually. Okay, so Japanese yen, no major news events. What can we expect from the JPY regardless is that the country's consistently dovish central bank is expected to stand in the way of a sustainable rise in the Japanese yen. So the central bank notes that kept all policy settings unchanged at their April meeting, reiterated that rates will stay low for the foreseeable future and won't hesitate to add stimulus if the economy needs it. Next meeting on the 16th of June, which is 2 weeks from now, and our biasness for JPY is actually just mixed, okay, for the next 24 hours. The euro, no major news today, okay. What can we expect? Regardless, the bulls are still expected to stay in the euro following the long-awaited change in the dovish stance of the ECB. So further bullishness is warranted if members get their way to see 50 BPS increases amid sustained inflation in the bloc. So the central bank notes that plans to phase plans to phase out the app into Q3 remain intact by the reducing purchases from 40 billion to 30 billion in May, then down to 20 billion in June. So highlighted risks for economic outlooks are tilted to the downside and have recently intensified with geopolitical and virus related challenges. The next meeting to take note of with the Swiss franc will be we'll get to NES 100. I don't have any fundamentals news. Someone is sending, hey Moses, hey Forex copy trading. I don't have views on NES 100 in terms of fundamentals, but we will be going into technicals on NES 100 if you guys want to look at NES 100. Okay. So next meeting take note of is 9th of June. Next 24 hours biasness is weak bullish. Okay, that's with the Swiss franc. Let's move on. Sorry, that was not the Swiss franc, that was the euro. Okay, we're gonna move on to the Swiss franc now. Okay, so the Swiss franc, no major news events today. The recent signals from SNB's Menschler and Chief Jordan towards a less dovish stance stand in line with the laggard monetary policy approach relative to the ECB. So central bank notes that kept all policies unchanged as expected, more concerned with the real effective exchange rate than the nominal, remains very dovish, in no way expected to change anytime soon. The next meeting to take note of is 16th of June. Okay, we've got a week bullish on that. Let's move on to the pound. Someone just actually asked me why the pound is dropping so much. Okay. I mean, there's a lot going on in Europe, so that's definitely going to affect. It's long awaited, but then again, they were comparing it to the Singapore dollars, which has been going strong lately, so that's probably why. Okay, so no major news events for the pound. Amid a lack of first-tier data releases and currency-specified news flow, the pound is likely to stay encouraged by the recent BOE stance to raise rates until inflation returns to target. Okay, the central bank notes that the third of the 6 members who voted for a hike viewed that the latest increase marked the end of current hiking cycle. The peak inflation revised to more than 10%, which added to the stagflation fears. Possible GDP contraction in 2023, quantitative tightening plans to be updated at the next August meeting. Next meeting on the 16th of June. Okay, do take note. 2 weeks from now. Next 24 hours bias is mixed to weak bullish. Mixed to weak bullish. Hey, we've got the Australian dollar, which usually moves in tandem with the Kiwi dollar. Okay, Australian dollar, no major news events today. What can we expect, however, is that Wednesday's Australian quarter-on-quarter GDP expected at 0.6%. It was previously 3.4%. May saw the hawkish mood from the recent switch in monetary policy stance from the RBA. So central bank notes that stated that further increases in the cash rate will be required to bring inflation back in line with the target. Announced passive quantitative tightening by stopping the reinvestment of maturing bonds. Next meeting on the 7th of June, which is a week from now. Okay, our biasness for the Australian dollars is mixed to weak bullish. Okay, mixed to weak bullish. In terms of the Kiwi, it would also usually move the same with the Australian dollars. Okay, if we had a mix to weak bullish for the Australian dollars, we usually have a mix to weak bullish on the Kiwi as well. Not all the time, but it is rare that our views are different for the Australian and the Kiwi. Okay, so what do we have for the Australian Kiwi dollar today? No major news events. Okay, however, amid a lack of first-tier data releases for the week of currency-specified news flow, the directional bias for Kiwi is likely to be drawn from the Aussie. Okay, like I said earlier on, next meeting to take note on is on the 13th of July. That's like a month and a half from now. Okay, again, biasness for Kiwi is mixed to weak bullish. Okay, let's move on to the loonie, the Canadian dollar. What do we have on that right now? Nothing. No major news events today. Okay, what can we expect regardless is that the Bank of Canada is likely to hike the overnight rates by 50 BPS on 1st of June. Along with firm oil prices, the loonie can be expected to see maintenance of bids regardless of the results of the upcoming current account. It's expected at 0.2 million, previously negative 0.8 billion. Month-on-month GDP expected at 0.5%. It was previously 1.1%, and manufacturing PMI expected at 57.5. It was previously 57.5 as well. So central bank notes that announced a start to passive quantitative tightening from the end of April by ending its reinvestment of maturing bonds, increased their neutral rates estimated to 2.5% from 2.25%. The next meeting you want to take note of in terms of the Canadian dollars is, of course, the 1st of June, which is 2 days from now. Okay, that's when the expected 50 BPS hike might happen. Okay, it's likely, not confirmed, but we'll see what happens on the 1st. Okay, we've got a weak bullish on that, so weak bullish bias on the Canadian dollars. Okay, let's move on to our last thing that we will look at today in terms of fundamentals. Okay, after this we're going to move straight to technical analysis. We're going to go to charts. We're going to look for setups. If you guys have any requests, do ask in the chat box. Don't be shy. You can ask in the chat box. Whatever it is, it can be NASDAQ, it can be Forex, it can be cryptocurrency, it can be whatever it is, instrument you guys want to look at. Do drop your requests. Okay. Hey, crude oil. No major news events for crude oil today. What can we expect from oil today? The EU is likely to delay a pipeline ban to appease dissident Hungary to achieve its Russian oil embargo deal. Okay, so the latest weekly Baker Hughes US oil rig count fell by 2 to 574. Okay, what do we expect from oil? Mixed, very, very mixed for oil. Okay, that's all I have for you guys in terms of news updates. We're gonna move straight to the live charts. We're gonna see if we can find any probable setups. The keyword here is probable. Okay, I do not encourage anyone to get into any trades if it's not probable or if you do not agree with my analysis. Okay, do not force a trade It's no point forcing a trade. Okay. Do follow us on social media. I left this here for you guys to maybe so you guys can go and look for us on social media. We've got Telegram, Facebook, Twitter, Instagram. Okay, do look for us. Vantage Markets. Most of the time, that's our name. If not, it's just spelt differently. Okay. Okay. Gonna move straight to the live charts. Can you guys see my charts? I'm going to give you guys like a minute or two to settle in. Okay, I'm just gonna adjust the settings and stuff, and I will be back in a sec. Okay, guys, I am back. If you guys have any requests again, do feel free to ask. Gosh, I'm late. I missed the news. Any news? Yes, news on gold. Just give me a sec. I'm retrieving. Okay, no major news on gold. It's just rising inflation expectation and less than aggressive central bank rate hikes. Path would continue to underpin the bulls in the precious metals. So we do have a weak bullish. No major news on gold. Very weak bullish on gold. However, I think what we want to do now is kind of combine technical analysis with fundamentals to see where it's actually going. Okay. To narrow down. Okay, so are we doing Nasdaq first or gold? No worries. Let's do Nasdaq, okay? Okay. Probably not the best chart to use. Not even sure if this is live. Actually, let's just do gold. Because there wouldn't be volume on Nasdaq today anyways because it's a public holiday for them. Oops, sorry. Oh, yep, probably got this. Going to erase all of this. Okay, so anytime I look for the setup, again, I always clear everything, remove drawings and indications so that I don't have a bias on where I think price is going. Okay, that's super important. You don't want to be swayed to one way or the other. Ultimately, I think what you want is to be able to come up with a concise, informed decision of where you think price is going. Okay, so the first thing I do usually when I'm looking for a setup is to find trend. Why I'm finding trend? Because I like to play continuations. I think the best trades, the crazy risk to reward trades are getting in on trend reversals, playing the reversal. So you're getting in, let's say it's going on uptrend, you're getting in on that exact moment when it does that downtrend. Okay. Right. I think those are amazing trades. The risk to reward is like 1 to 10, maybe 1 to 15, something like just crazy risk to reward. But the one that is more likely to happen more often than not is actually just playing the continuation. Okay, so when I say playing the continuation, I mean price is already moving on a downtrend, right? It's moving on a downtrend. Every time price pulls back, you get in for the sell. Pulls back, get in for the sell, pulls back, get in for the sell, pulls back, get in for the sell. Okay, so you're playing the continuation of that downtrend, okay, which is what I much prefer playing because I do think it is safer. You're not going against trend. It is, like I feel like reversals are great, but you are going against trend. You're betting on something to break trend. Okay, so let's try to see what trend gold is moving on. I immediately see an uptrend. Okay, oh dear, Looks like the uptrend has broken. Okay, I mean, it depends on how you draw it as well. Can draw it so many different ways and it would still be valid. If you draw it this way, right, for example, it would still be valid because an ascending trend line, right, an ascending trend line would require three touches. In this case, you have 4 touches, making this a valid ascending trend line. Okay, so yeah, this is, I would say, this is a valid ascending trend line. On top of that, price is still, let me see, is it making higher highs? It is making higher highs in this point, higher lows, higher high. This part, it kind of broke this low already, but not this low. So I would still say that the uptrend would still be valid because there is still possibility of price doing this, right? Going up, making that higher high, coming down and reversing or whatever. Okay, so I would say this uptrend is still valid. Can we check crypto Shiba? Yes, we can check Shiba. Martha, just give me a sec. Let's do gold first and then we can move to Shiba. Take note, Martha, we can do Shiba, but I have to tell you, because Shiba is not a very it is a popular cryptocurrency, right? But the more popular one is Ethereum and Bitcoin. So based on my own personal backtesting and the backtesting that we have done here, we usually focus a lot more on Ethereum and Bitcoin. So that being said, because we focus on Ethereum and Bitcoin, we do a lot of backtesting on Ethereum and Bitcoin. We kind of know like what the characteristics of Ethereum and Bitcoin is. But Shiba, if I were to chart it today, it would be the rare times that I chart Shiba. So I wouldn't know exactly how well Shiba behaves and its characteristics. So I hopefully, when I do general technical analysis, I use general ways of forecasting where price is going. Hopefully it is accurate as well. Okay, there are some charts that are just not as accurate. Okay, I will give you an example. Gold is one example. Okay, why? Your support and resistance can be so on point on gold. Okay, but gold wicks a lot. Do you see this wicking? It's so much wicking going on. Okay, so you need to know, because I chart on gold a lot and I trade gold a lot. I need to know that my stop loss with gold cannot be one of those super tight stop loss, because I might get wicked out. I actually got wicked out of gold so many times before I finally learned this lesson. Okay, there was one trade that actually cost me tens of thousands, because for example, I got in here for the sell, my stop loss was here above my sell entry, and it just came out, wicked me out, and continue with that downwards move. Okay, so with gold, that's what I noticed. We can go to Shiba later. I don't know what patterns or what to look out for Shiba, because it's not what I usually chart on. Okay, but yes, let's continue with gold. So gold, I would say, is still moving on an uptrend. Okay, let's see what 4 hours is saying. Like, one thing that was super clear to me straight off the bat, I straight see this breakout here. Okay, so I see this breakout, price was moving in this nice downtrend, and it was just a break here. Okay, that means that the bearish pressure has reduced. Okay, so it makes me feel like, okay, I don't really want to get in for a sell, because it looks like bearishness has reduced. Okay, it looks like bearishness is gone for now. Okay, for now, at this current point in time, I'm not saying it's doing a trend reversal. It could still be going on a downtrend, just that this is a pullback. But I have to acknowledge at this current point of time, bearishness has reduced. On top of that, I do see an ascending channel. So let's zoom in. It's not clear for some of you. I do see a possible ascending channel. Let's see. Need my channel tool. Okay, I do see it moving in a very depends on how I draw it too as well, right? trying to draw it as accurate as possible. Okay, just give me a sec to try to get the best possible channel, because the more accurate the information you use, the more chances you would have of price going the way that you wanted to. Okay, so I mean, I'm trying to adjust it. On one look, it looked like it was an uptrend, right? It looks like it's an ascending channel, but depending on how you draw it, which should be the most accurate way of drawing. You should try to draw it as accurately as possible, because if I do it this way, it's not really that accurate. Why? Because an ascending channel would need 2 touches on top, 2 at the bottom. Okay, in this case, it's only, I would consider this 1 touch. Okay, although it looks like it's 2 touches. Why? Because this is not a very significant move. Okay, it looks like it's just kind of hovering on this support. Okay, so to draw this channel as accurate as possible, it would need 2 touches on top and the bottom. And if I draw it in that way, it immediately becomes a breakout, right? So this is very subjective. It's very confusing. Some traders might draw it this way. Some traders might draw it this way. And like, there's no right or wrong. It's just which information is more accurate and which information is better in terms of forecasting. Okay, so in this case, it's kind of giving us mixed signals. I'll just leave this here for reference, right? I much prefer it was a clean, nice ascending channel. In this case, it's not a clean, nice ascending channel. It's kind of like a broken channel or ascending channel. It's not very clear. Okay, so I much prefer thinking it's a broken channel. Okay, because it would fit better in terms of our criteria, which is 2 touches on top, 2 at the bottom. Okay, and the breakout happened here. Okay, what I want to do now is we're going to look for support resistance. Okay, resistance is here. Support is here. If anything, it looks like it's moving in a possible rectangle, right? Not the best. Possible rectangle. Okay. One thing I could see possibly happening is that this is a trendline breakout, a channel breakout. It's going to come here, retest, and then here it's gonna reverse. Okay, that's what I could see possibly happening, at least for now. That's my bias, right? It's my bias for now, but let's see what other things the chart is saying, because the more information I collect from the charts, the more accurate my analysis would be, right? Because I now need to weigh, is it more too bearish or more too bullish? There's no way of me saying like, okay, it's 100% a buy or 100% a sell. There's no such thing in trading. Okay, there's no 100% unless you're doing some insider trading, or like, so you found a way, you have a crystal ball or something. Okay, I personally do not know where you can find analysis that is 100%. If you guys do know, please share, so we can all get rich together, right? But yes, in terms of just being analysis and finding charts, the only job I can do, or what I can do, is try to find as accurate data and information as I can, and then using that data and information to find my possible outcome of where I think price is going, whether up or down. Okay, so if I'm using this channel breakout, it immediately becomes a down, right? Because that means that this is a breakout, it's breaking out. This could just be a retest and then a reversal from here. Okay, this could be a sell. Okay, if you draw the channel another way, it could just be still in the channel. Okay, so based on support and resistance, there is a resistance here, and this is a support here. That's why the channel should only be a reference. Using the channel, you shouldn't like get too confused. What should be weighing more on your decision making is actually horizontal support and resistance. Okay, horizontal support and resistance is better, should be priority when you are looking for setups. Okay, it should be priority. So at this current point of time, this is my forecast. Okay, we need hold on, hold your horses. Do not jump into the trade. We need other things to back up my analysis. Okay, at this current point of time, my analysis that is bearish. After we're done here, it might be bullish. Okay, but at this current point of time, just based on horizontal levels alone, I do think it is bearish. Why? Because there is a resistance here. Price will get here. There's some kind of resistance and reverse back. Okay. Okay. On top of that, this may or may not be channel breakout, maybe supporting that resistance for more down movement. Okay. Next thing you want to do is look for horizontal levels. Sorry, Fibonacci levels to back up your bias. Okay, I'm gonna look for Fibonacci levels. The first thing I'm gonna do is look for a retracement that lines up with our first resistance. First resistance, there you go. Okay, let's see if there's any Fibonacci levels lining up at our first resistance. Remember, the more Fibonacci levels lining up at our key levels, the stronger that key level is and the harder it will be for price to break. Okay, so because I am looking for Fibonacci retracement that lines up with our first resistance, I want to plot from this swing high to this swing low. I'm going to remove select 5 levels. Why do I select these 5 levels? Because these are the 5 levels we look out for when we're looking for Fibonacci retracement levels. 23.6, 38.2, 50%, 61.8, and 78.6%. Okay, guys, very obvious. I just want to know if you guys are still following me. Which level is closest to our first resistance? Okay, which of these 5 Fibonacci retracement levels should I keep? Okay, there's only going to be one level that I'm going to keep, and that's the level that is closest to our first resistance level. It's very obvious, but I just want to know if you guys are still following, right? All right, I'm going to wait here until someone answers. Okay, at least you guys are still trying to follow. It's totally fine. Okay, those that can see is the 38.2. 38.2 is the one that is closest to the first resistance. So because this level, 38.2, is supporting that there is resistance at our first resistance, we are going to go back, deselect everything else, and only keep the 38.2. Okay, thanks for answering though. Thanks, Ravello and Harish. Thanks for answering. I just want to see if you guys are still following. I can see the one that is close to our first reason. Yes, it is 38.2. Okay. I'm glad you guys are still with me because I didn't see the chat moving. I think before we moved to like YouTube and Facebook and when we were doing go-to webinars, you guys were a bit more active. Now that we've moved to YouTube, I don't know, it's because you can see like each other's conversation now. That's why you're a bit more shy. But when we went go-to, I remember you guys were a bit more active with like asking questions and whatnot. You know, we don't have to be shy. We're all here to learn, right? The whole point of us joining this webinar and for us to give this webinar is so that we can learn, we can grow, and hopefully grow our account as well, right? We want you guys to be profitable traders. That's the whole point of this webinar, so that we can all grow and be profitable traders. Okay, so we've got the 38.2. Thanks, Ravello. Okay, we've got 38.2 lining up nicely with our first resistance. We now want to find if there are other Fibonacci levels lining up at the 38 point at our first resistance. Why? The more Fibonacci levels lining up in that area, the stronger the resistance will be. Okay, and that becomes a Fibonacci confluent area. Okay, so let me see if I can see any other levels that is possible. Okay, I do see a Fibonacci projection, but it looks like it's not going to line up anywhere. There's no way this is going to line up anywhere close. Yep, definitely not. Definitely not. Okay, let me see. There's one more here. Okay, there is something lining up. Okay, the 78.6 Fibonacci projection lines up close to our first resistance. Not exactly at our first resistance, but at least it's close, right? Meaning that that area is definitely an area you want to look out for. Okay, let me see if we can find any more levels lining up. 61.8. Okay, I think I wouldn't be able to find more levels lining up, which is totally fine. I've got 3 right now. Okay, I've got 3 levels lighting up in this area. That means that we do think that when price gets to this level, it's going to have a hard time breaking it. Okay, it's gonna have a hard time breaking it, meaning we could possibly look for entry for sell. So at this current point in time, I am still biased of a sell because nothing at this current point in time is signaling that the sell is not possible. Okay, why am I doing that? One, this channel may prevail on the hey, this channel may or may not be accurate, but we can totally ignore this channel. We can see this horizontal level. This horizontal swing high level is lining up nicely with 3 Fibonacci confluence level. It's lining up nicely with 3 Fibonacci levels, making me think that this is a kind of strong level, meaning price, there's a high chance that price will get here and reverse from here, right? Okay, that's what we're expecting price to do. Okay, so now that we've done that, we've got our entry. I think our take profit is okay because this is the next swing low support. This is the next support. You can probably play it to here as well. Okay, so you can probably get in at 1870-ish area. Play it to 1850. 1850 is a good, that's 20 points in terms of goal, and I think that that's quite a bit, okay, for goal. If not 1843, of course, depending on your lot size as well. 1843. Okay, so at this current point of time, these are my 2 take profit areas. Okay, again, only get in if you agree with my analysis. If not, please do not get in. Back you guys, only get in if it's you think it's probable. Okay, so that's what I've got for now. Next thing I want to do is back up my analysis with indicators. Why? Because I want horizontal levels to tell me that it's going down. I want Fibonacci levels to tell me it's going down. Now I also want indicators to tell me it's going down, because the more things telling you the same information, it just means that your trade becomes very probable. Your analysis becomes probable. That's the whole thing about trading and looking for setups. Our aim is just to find probable trades. It's just finding as high as percentage as we can to find trades that will work out. Okay, it's the same with anything else you do in life. It can be, I know I use this example a lot. It can be just crossing the road, for example, right? If you cross the road at a proper pedestrian crossing, your chances of getting to the other side of the road safely becomes higher than if you cross the road at just a random part of on a highway, for example, crossing the highway, not even looking left and right, just crossing randomly. Okay, your chances of getting to the other side of the road becomes very low. Okay, your chances of getting to the other side of the road safely becomes very low. So you want to increase your chances of getting to the other side of the road safely. By doing that, you can do things like looking left and right, using the proper pedestrian crossing, maybe crossing at an overhead bridge, whatever it is for people who use. Okay, these are the things that increase your chances. It's the same as trading. We want to increase our chances of getting correct and profitable trades. So we do that by using indicators, trend lines, support resistance, looking for chart patterns, looking for candlesticks patterns. Okay, these are the things that will help us increase our chances. So what I'm trying to say is that there's no 100% in trading. The only thing you can do in trading is try to get as high possible probability trades. Okay, it's just very calculated risk in terms of trading. Okay, so we've got that. Let's look at RSI, stochastics, Ichimoku, and maybe MACD. I want to see how's the volume doing. Okay, why am I using these for? Okay, because they have so many indicators out there. Half the indicators are going to tell you that it's going up. The other half is going to tell you that it's going down. So which indicator you should use? You should use indicators that are effective to your strategy and your method. Okay, so I have found that Ichimoku have been very effective in looking for trades for me. Okay, so that's why I keep using Ichimoku, RSI, stochastics, and MACD. Okay, so let's see what Ichimoku is saying. Ichimoku, how it works is if price is below the cloud, that means it's bearish. Okay, if it's above the cloud, it means that it's bullish. So just using that one factor from Ichimoku, we can safely say that price is bearish. We're bearish. That Ichimoku is indicating bullishness to us. Okay, because price is above the cloud. Okay, on top of that, it's above a green cloud. Okay, which is indicating bullishness to us. Okay, next thing you want to look for in Ichimoku is, okay, so usually in Ichimoku, I only use the plot background, conversion line, and baseline. Okay, when the blue line, which is conversion line, is below the baseline, the red line, it means that it's bearish. If the blue line is above the red line, it means that it may be bullish. Okay, it may be. The keyword here is maybe. Okay, more importantly, I think I much prefer seeing where price is. Is it above the cloud, below the cloud, or in between cloud? Okay, if in between cloud, it just means that it's a bit neutral. It's nothing much saying. Most of the time, I prefer catching the break of the cloud. The recent break of the cloud is where I like to enter for my trades. Okay, so price just recently broke. We kind of missed it already, but it's okay. It's still pretty new. Okay, if this is in fact an up, that means it's pretty new. Okay, problem. What's the problem? The problem is that our analysis is saying that it's bearish. We're calling a sell from here, but Ichimoku is saying that it's bullish. Okay, so Ichimoku is not agreeing with us. Okay, we got one strike. Okay, Ichimoku is saying no. Okay, let's see what RSI is saying. If anything, I don't see much of what RSI is saying. I do see like kind of like, let me see, is this divergence? I guess it is kind of like a little divergence here. Okay, there's a possible bearish divergence here. Okay, why? Because here price is on a downtrend, but here price is going up. Do you see that? Okay, so it might be possible divergence. So I would say RSI is agreeing with us, right? RSI is agreeing with our downtrend analysis. Let's see what stochastics is saying. Before I even consider RSI, I need to kind of back test a little to see how well RSI was working on these charts anyways. Ichimoku was working well on these charts, right? You can see price breaking here, it shoots down. Price breaking here goes up. And here it moves sideways. Sideways market does not work for Ichimoku. Price breaking here, it shoots up. Okay, so in the last few times Ichimoku worked well, I'm gonna safely assume that Ichimoku is gonna work well again. Okay, RSI, it was working well. Let me see. This part wasn't working well. Kind of showed divergence here, but didn't really play out. Okay, that's okay. Stochastics isn't saying anything. Let's get rid of that. MACD. Give me a sec. There's different ways to use different indicators, but the way you should be using is the way that you have backtested and found to be effective. Okay, how I use MACD is I try to find 4 volume decreases of bearishness and bullishness. Okay, in this case, MACD isn't saying much either. I don't have anything to back me up right now other than this RSI possible bearish bearish divergence. Okay, nothing, there's no very strong indication that it's gonna drop from here. Okay, when you want to get in trade, you want very strong signals, very strong like possibility. But in this case, I think I'm like not even 95. 95 is too high. 65 to 70% chance, right? Less than 70 for sure chance that price is going to drop from 1870 to 1842 or at least 1850. Okay, I think there is a weak bearish on this. I think it's a bearish. How confident am I? Weak. It's a weak bearish. Okay, fundamentals, earlier on we were saying that gold is bullish, so not only that, it's actually going against what we think fundamentals is doing. So if you do want to get into this trade, just know that a lot of things are not lining up as great as possible. I'm not saying it's not going to play out. I'm just saying the probability of it playing out is not the best. Okay, it's not the best. Okay, so I'm going to move on to the next chart. Okay, I'm going to move on to the next chart. I think there was a request on let me see, Shiba, right? Again, Martha, I can do an analysis on Shiba, but I don't know how well it will work. Okay, you know what? I'm not gonna, honestly, I much prefer not doing it. Just one look, I see a lot of wicking. Okay, a lot of wicking is scary for my strategy because my playing style is very tight stop losses. Okay, I go very tight stop losses, and the reason I do that is because I want to go bigger lot sizes, because that way I can go bigger lot size. I can risk more when I do tight stop losses. Okay, Shiba, trading Shiba, my analysis will not be great. Okay, but that being said, I can just do a rough analysis of where I think price is going. Just a very rough idea where I think price is going. One thing for sure, it's on a downtrend, right? I do not see any signs of trend reversal. Okay, so it's on a downtrend. Just broke the support. Okay. Next support is here. Oh, yikes, man. It's like 0.000000949. That's like 5 zeros, man. That's not even 10 cents. Okay. I really doubt technical's gonna work on this. I really doubt technical's gonna work on this. So I'm not gonna continue. Let's go to something a bit more proven to, like, I'm a bit more, at least I know it's more effective on technicals. Okay, let's try Ethereum. Maybe we can try Ethereum. Okay, we can try Ethereum and see where we think Ethereum is going. Okay, one thing for sure, I do see a downtrend. I don't see anything else, at least not at this current point of time. Okay, downtrend, very obvious downtrend. Let me see if I see anything else. There's a triangle breakout. Nice. Recent triangle breakout, but this is on a daily. Okay, this is on a daily. One thing about this is, like, I'm always afraid it comes back up and then retest and continues with that downtrend. Okay. Daily is a bit too big of a time frame to look at because that it might take days to weeks to play out. Okay, I much prefer looking at the 4 hours. I don't have much time with you guys anymore, so I'm just going to highlight some things in terms of Ethereum. Okay, one thing recently broke out the triangle. That means that there is enough bearish pressure pushing it down. Okay, this bearish pressure pushing it down. We want to see a bit more current. Okay, so let's see what the 4 hours is saying. I wouldn't be able to find any levels other than horizontal levels. Let me see if this trend line. Oh, yikes. Okay, trend line breakout. Okay, trend line breakout. Just highlighting some horizontal levels. Okay, it's at a very strong key. It's at a key level right now. Okay, it's at a resistance right now. Is it gonna break up or is it gonna reverse from here? We don't know. Let's find out. Okay, if it reverses, the next level is 1720. Okay, or 1800 on the minimal, but 1720 is where it can potentially go to. Do take note, this is a daily support. Okay, this area is a daily support. That means that there's a lot of barriers. Okay, it's gonna be a little hard for price to even break the 1721 area. Okay, so trendline breakout, but it's at a resistance. Yikes. I was trading this, I would be very confused as where I think price is gonna go. Let me see. Okay. Right now, it's at a key level. So what you want to do is wait for the break of this key level. If it breaks, next level is going to go to is 182086. If it doesn't break, it means it's going to reverse. Next possible level could be 1720 or 1800. Okay, let me see. This is, I won't be able to call anything for this. I can only tell you guys to wait for the break. You need to wait for the break. You need to let the market decide where it wants to go. The market has not decided yet, and we are not going to decide for the market. The market will decide, and we are just here to ride the wave. Okay, we are just here to ride the wave. Nope, that's not even valid anymore. Okay. Some kind of resistance here. Little bit of resistance here. Horizontal pullback area, quite a strong one. Okay, quite a strong one, but need more things backing it up. Yikes, nothing lining up. There is nothing lining up here. Okay, guys. Other than this horizontal level, I can't find any Fibonacci levels lining up here. It means that like it's better when there's Fibonacci confluence. Okay, there you go. Possible Fibonacci confluence taken from different swing highs. Okay, not the best, right? Not the best, but that's the only thing I can find. Okay, do I think this is a sell? Let me see what the indicators are saying. Bullish. Don't think it's a sell. Based on horizontal levels, I want to believe that this is a sell. Okay, but indicators are not agreeing with me. Okay, nope. RSI, nope. Okay, indicators are not agreeing that this is a sell. Okay, nope, nothing clear on Ethereum. Nothing clear on Ethereum. Possible breakout on Ethereum. I think what you want to do is wait for the break and then you can consider a buy. Okay, I don't like the bearish signs are just not there. Okay, so I much prefer waiting for the break and getting in on a buy. Okay, that's all I have for you guys today. Thanks for attending our webinar. I will see you guys tomorrow, I think. Yes, I will see you guys tomorrow. We'll be going through the basics. Okay, we're gonna start our entire Tuesday. So Tuesdays is when we teach you guys like the basics of forex and trading and whatnot. It's topical. Okay, this when we don't really look at charts. It's more like going through fundamentals of trading and stuff. So I'll see you guys tomorrow. We're gonna start from the basics, like back to the basics. We're gonna talk about introduction to forex. Okay, so if you are new here, or even if you just want to refresh your memory, right, do join our webinar tomorrow. I will see you guys tomorrow. Thanks for joining. Bye guys. Bye Martha. Bye Black Otter Central. Bye Ravello, which I'm assuming is the same people. Bye Harish. Bye Rafael. Bye SU. Bye Forex Copy Trading. I do not know who else is in this webinar since we moved to YouTube and Facebook and everything else. There's no way for us to see who is here, or at least I don't know how. Let me find out so that I can say hi to the rest of you. Okay, bye. See you guys tomorrow.